Wall Street ended lower on Thursday, with growth stocks including Tesla and Amazon weighing most on the S&P 500, as Russia's invasion of Ukraine, now a week in, kept investors on edge. The Dow finished more than 0.25% lower, and the S&P 500 closed down 0.5%, while the Nasdaq ended down more than 1.5%. Palumbo Wealth Management's chief investment officer, Philip Palumbo, said the soaring price of oil caused by the crisis in Ukraine was stoking fears that the Federal Reserve could raise interest rates faster and higher than expected.
The number one thing investors have to know is, as it relates to the stock market, is just wherever the price of oil is going to go is where the market's going to go. Oil is higher today, markets are down today. And what that means is, as the price of oil continues to climb, Fed Powell is going to have to move a lot faster than he's talking about. And if the Fed has to move faster, that means interest rates have to go higher. If interest rates have to go higher, it puts pressures on markets. And that's why the market is reacting the way it is.
Wall Street surged in previous sessions after Fed Chair Jerome Powell said he would back a quarter-point rate increase at the mid-March meeting, easing some concerns of a more aggressive rate hike. On the earnings front, shares of Kroger soared more than 11.5% after the grocer forecast annual same-store sales and profit above market expectations, encouraged by strong demand for its pickup and delivery services. And American Eagle Outfitters slid more than 9% after the apparel chain forecast a decline in earnings for the first half of 2022.
Russian banks face deepening pain from Western sanctions. Many have been excluded from the SWIFT system of international payments. But now some Western banks fear they're in line for a big hit too. France's Societe General fears Russia could strip the bank of its local operations. It's among the largest foreign lenders in the country, with about $20 billion in exposure. SocGen says it's working to reduce its risks there, but could withstand the worst-case scenario if it had to. Meanwhile, Citigroup says it could face billions of dollars in losses over Russia. The bank says it's looking to exit its assets in the country. It said this week that its exposure to Russia totaled almost $10 billion at the end of last year, far higher than previously indicated. For now, it's still Russian banks in the most acute pain, though. The country's number one lender, Sberbank, has already had to quit most European markets amid huge cash outflows. Now, sources say regulators are increasingly concerned about the European arm of number 2 bank VTB. One of the sources says it could be closed by watchdogs in Germany within days.
Facing a backlash from customers, Rivian Automotive on Thursday said it would roll back the price hikes it announced just 2 days ago on its electric vehicles. The company, which is partially owned by Amazon, said on Tuesday that it had increased the prices of its vehicles by 20% because of inflationary pressures and higher component costs, taking the base price of its R1T electric pickup up to about $79,500 from $67,500, and the R1S SUV to $84,500 from $70,000. Elon Musk, the CEO of rival Tesla, taunted Rivian for the price hikes on Twitter, saying it was easy to make an expensive electric truck, and that if it's hard for Tesla to make an affordable one, then it's, quote, damn near impossible for others. In a letter to clients on Thursday, Rivian CEO RJ Scaringe said prices for pre-orders as of March 1st will roll back to the previous price and that customers who canceled orders can reinstate them. Scaringe said the cost of components and materials that go into building the electric vehicles have risen considerably for everything from semiconductors to sheet metal to seats, adding, quote, as we worked to update pricing to reflect these cost increases, we wrongly decided to make these changes apply to all future deliveries. Shares of Rivian fell by as much as 6.6% Thursday morning, but had pared some losses by midday.
IKEA has become the latest Western firm to close its stores in Russia. The world's biggest furniture brand is also pausing all sourcing in the country and ally Belarus. Thursday's announcement came as IKEA's store owner Inca Group's retail manager told Reuters it now expected to raise prices by an average of 12% this fiscal year, amid soaring raw material costs and supply chain disruptions. While a raft of international companies have already halted operations in Russia, IKEA is one of the first to also halt business with Belarus. The country is purely a sourcing market for the furniture giant. It has no stores there. In the year through last August, Russia was IKEA's 10th biggest market, with retail sales of $1.8 billion. IKEA also produces chipboards and wood-based products at 3 sites in Russia and has around 50 direct suppliers in the country, which produce a wide range of goods for the domestic market. The decision to pause operations in Russia affects 15,000 employees, but Inca Group says all staff would get paid in rubles for at least the next 3 months. The crisis in Ukraine continues to roil commodity markets. Brent crude futures charged towards $120 a barrel on Thursday, its highest in almost a decade, as US sanctions targeting Russian refineries and disruptions to shipping begin to bite. Russia is the world's 3rd biggest oil producer and the largest exporter of oil to global markets, according to the International Energy Agency. There's now concerns that its oil and gas exports could be the next target of US sanctions. Washington has stopped short of targeting energy exports as the Biden administration weighs the impact on global oil markets and US prices. In industrial metals, aluminium traded in London rose 2.3% to an all-time high of $3,650 a tonne, while nickel climbed more than 4%. Traders are racing to factor in a loss of supply from the 3rd largest producer of both metals. Aluminium prices on the London Metal Exchange have gained 30% this year. Meantime, US wheat futures have surged 25% this week alone. That's as markets attempt to price in the impact of a potential loss of Russian supplies if the international community rolls out additional measures against Moscow. Russia and Ukraine were projected to account for 28.5% of global wheat exports in 2021, according to the US Department of Agriculture. The crisis has seen global prices for the grain jolt higher to try to accommodate a big drop in supplies from both countries. For businesses and consumers, it all spells higher prices ahead.